All right, I think we're going to get started here in just a minute. Per usual, let me see if I can get a mic check. I think the stream is just turning over. The usual, it's about 30 to 60 seconds behind. So let's let everything catch up. All right, so we'll get started as soon as I get a mic check here. It's the usual format. I mostly want to do questions. I have names that I can run through. We'll briefly discuss what's going on with the market, a few of the other interesting sort of sectors and markets out there, and then I have trade ideas. We can definitely look at those, but I'd look hopefully to get some questions from you guys. So as soon as I can hear, mic is good, and I just got that. We'll start. Excellent. So it should be pretty short. I'm not going to keep this too long. I just want to stay as long as you guys have questions. So I hope everybody had a great weekend. We're starting out Monday with a little bit of weakness here in the markets, but all things considered, still not too bad. So let's take a look at the S&P 500, the SPY ETF, real quick. So not a lot has changed. If you guys watched the video we put out yesterday or this weekend, the similar kind of analysis applies. Very strong breakout that we were in throughout the month of July, and we've seen strong momentum kind of take hold of this market ever since then, but we're starting to slow down a little bit right now. We put out a post on Thursday saying this day right here specifically, this Thursday was where gave us a little bit of pause where, you know, if momentum was still as strong as it was previously, we would have seen follow through from this move on Wednesday, but we didn't. We actually came back down into the range. We saw breadth starting to weaken a little bit, the NIMO starting to come back down amongst other indicators. So that was kind of where we said, well, this is probably going to start to move sideways a little bit, and just kind of catch its breath and kind of wait and see, especially as we're going through earnings season. So I still believe that's the case. We're in this range right now. Can we continue higher? Absolutely. Can we pull back? Sure, right? Anything can happen. I'm not here to make predictions. I'm just looking at what's been happening recently in the market. And for me, it looks like momentum weakening. We're either going to start this more of a consolidation phase, or we'll either start to pull back, or if we do break out, I believe it's going to be more of a grind than some type of strong surge, although with earnings out, anything can happen. Again, I don't want to make predictions. I just want to keep an open mind. So that's the way we're sort of looking at it. I think the easy money breakouts were certainly made already in July. Again, doesn't mean it can't happen again, but when you start to see different names pulling back and this kind of momentum slow, you just have to make sure you adjust your strategy accordingly. So I think that's it I want to say about the SPY. I don't think much else has changed. I can dig into it if you guys have further questions. Let's take a look at a few other interesting markets right now. TLT's one. And for those of you who are just joining, the stream's about 30 seconds to a minute behind, so leave questions in the chat up there if you have any questions. If you want me to look at a stock specifically, that's mostly what I'm here for, so feel free to do that at any point. Let's look at TLT real quick. I like TLT. I haven't pulled the trigger on buying this yet. I know it's very sentiment's interesting on TLT right now, but it's been in a strong trend. Momentum MACD making new highs recently throughout July as we pushed all the way up to 143, and now we're pulling back to the 20-period EMA. You're finding some support here. We undercut it a little bit, of course, kind of filled this gap from back here in mid-June, but this is still a healthy bull trend, right? Weekly time frame, you can see how strong this has been. Monthly time frame, even more so. So, I get the argument about rates and where they can realistically go, but all I care about is price action, and for me, we're in a strong trend. Momentum's been making higher higher highs, and now we're pulling back. So this is where I want to see if the buyers can sort of step in and put in a higher pivot low here. I'm not in this right now, but I'm just watching it, and even if it's just a trade to retest the old highs, you know, getting involved around 139, under 140 for a trade to 143, you know, that's what I'd be looking for essentially. If we can get a breakout above there, sure, that's great, but I think there could be a trade emerging here. I'm still not convinced though, so I don't have a position in this yet, but it's one that we're watching. So we'll see if that one starts to develop in the coming days. The next let's see, the next one I want to go through, let me put out that. Okay, the next one I want to go through is IBB. IBB is the biotech index. This is something we're long already, actually. So we've been in this for a few days now. Got involved in it back here on this kind of breakout engulfing day, almost a fully engulfing day here. And I like IBB. I at least like it to the top end of this range, which is there's a few more points to go. So I know it could be, you know, you could consider it a little thin, even though we did get involved in it back down here. You know, I'd like to see a retest up to this 285 level. A lot of these names under the surface are acting pretty well. And remember, IBB is going to be the market cap weighted index. So Gilead, Biogen, those guys, Amgen, those big guys are going to have more of a weighting in this type of index. So keep that in mind. But I like the formation here again, and if we can especially get a breakout above 286 and start to break this pattern, this sideways consolidation pattern, take out these recent pivot highs, that of course would be really bullish. So that's what I'm looking at here. We're in this again. This is a trade that we're currently in, and you can see we're trying to get a few more points out of this, probably start to take some profits. Take a look at how it's acting up here, but it'll be interesting. I know we're still in the midst of earnings season, which is going to affect this, so we'll have to see how this one goes. But just take note that this is already positive today on a day where most indices are red, most sectors are down on the day. Biotech is up right now. I like that. For those of you who are just joining in, feel free to leave some charts or comments, questions in that chat. That's what I'm mostly going to be here to take. So let's jump into XLU, and then I have some trade ideas that we can look at. Otherwise, I'll start to look at some of those questions. XLU, another one. This is similar to TLT, right? Where everyone's saying this is run so far, this is hot, this is overbought, how can you pay up for this? I mean, we're momentum traders where we like breakouts, we like momentum, and TLT, XLU, these types of things that most are saying are too boring or too overbought or too stretched are things that look great to us. We've had a number of trades. We've had 2 trades this year in XLU. Nice trades that worked out great. It's been in a strong trend, continues to be. Recently broke out. Something we're watching. You know, closely. I don't see anything just yet, but it looks interesting here. But you can see we had the nice breakout back on Friday, and it's just consolidating sideways right now. But a lot of these names under the surface as well are continuing to act well in strong trends. They look good, so that is all around constructive for the utility ETF XLU right there going forward. So we'll have to see how that plays out in the coming days and weeks. Let's look at some questions here, and then I can look at a few more names for trade ideas that I have coming up. And before we get into that, I just want to remind everyone that I am hosting a webinar tomorrow. You can see that text underneath the screen there. If you're not subscribed, if you want to see basically the setups that I use to get into something like an IBB, or I mean, man, we've been in a lot of trades this week or this month. Check it out. We're going to be going over setups, strategy, entries, exits, all that good stuff that everybody always asks about. So traderisk.com/webinar. It's free. It's open. If you guys are interested, check that out. It's going to be tomorrow at this time, at this exact time. And if you can't make it, then I'll send you a recording to the video. So definitely check that out if you're not on the list. Let's take some questions here. So Visa is the first one. Visa, let's see. And if you guys have time frame, that would also help a lot, depending on what time frame you're looking for. Or even if you want to go as specific as saying, you know, you want to hold it for a week, or feel free to get specific when you want me to look at some of these, because it certainly helps. So looking at Visa, we'll start at a weekly time frame. That's usually where I look first. So we're in an uptrend. It's been grinding higher for 6-7 years now. It's been consolidating though over since basically about mid 2015 here. So this $82 level has been kind of holding pretty firm here as resistance. Now that's the weekly time frame. You can see we're coming back up to some from major resistance above us. If we go down to the daily time frame, and I can draw these trend lines a little bit better, but you get the picture here. $81. This area here is where we've continued to fail, and honestly, I'd want to see us break out above there before getting involved in this. If you're looking at an entry today at $79, well, you're playing it pretty thin considering you got about $1 or so of upside to the point at which we failed repeatedly in the past. So yes, the more times you test something, the more likely it is to break out, but still to be trading right up into a major resistance level is not something I'd want to establish a new position on. If you're in it already, then I think you can stay with it. Depending on your time frame, this is where time frame is going to be important. You could put your stop at some different levels, but on a weekly time frame, structurally everything's in place. This is an uptrend. I like it. A lot of chop recently, just be aware of that, and basically above $81 is really where I'd want to be more interested. So the VIX, I'll take a look at the VIX. This is not something, I'm assuming you're talking about VXX. This is not something I typically chart. I'm aware of the VIX, but I don't ever really look at it to chart or to trade per se. So I don't know how helpful I'm going to be here. And the VIX, we all know it's gotten crushed recently. I think it's been one of the fastest moves of volatility deflation, like immediately following the Brexit, basically going from 17 down to 11 in some type of record-setting days. Don't quote me on that, but I believe that's the case. For me, again, I'm not going to get too much into this because I don't consider myself an expert, and this is not something I usually ever chart. You'd have to just see a pop in volatility, and if you're looking to try and trade this, you get a pop in volatility and you want to try and play some momentum off of it. And I know people are going to fade that. It's controversial. I sort of don't even want to go down this route anymore. So, I guess to sum it up, I'm not the expert on this, so I'm going to sort of pass on this. But it's starting to stabilize. We're starting to see some type of interest in downside protection or fear coming in at this level, if that's the way you want to think about it. Sorry, I'm not more of a help on that. UA, let's discuss that. So UA, I think this has earnings coming up. So again, that's going to sort of be a caveat with all of these names that we look at. UA has been consolidating, on a longer term perspective here, looking at the weekly time frame. It's been in a nice uptrend for many years now. It's done a lot of splits along the way. It's been a great winner. In 2015 is where we finally saw it kind of top out, pull back, put in a meaningful pullback, one of the largest pullbacks we've seen in 8 years or so, going from $52 all the way down to $31 at the beginning of 2016, and now it's just going sideways. And I think it's in this process now of consolidating. I think the long-term uptrend's intact, and I think it's consolidating within the context of a long-term uptrend. So I think the action's healthy here. Do I think we can just V-shape all the way to new highs? There's always a probability for that to happen, but I think more or less we're in this more choppy consolidation basing type of phase for Under Armour that could last a lot longer than people probably think. So for me, it's in an uptrend here on the daily time frame. You have great place to manage risk against. This $35 level is where buyers stepped in. You arguably put in a higher low right here between the January lows. So that is, a start of kind of constructive firming action within this larger term consolidation. So I think that's constructive, but again, I think as you get up to $47 and especially $50, you get back up here on especially that first test. I gotta believe that there's going to be motivated sellers up here. So I think it's kind of a range that you just want to be prepared for and play the range accordingly. Even on a longer term basis, from 35 to 55 or 50, this is the range I think we would be in for 12 months, a year, 2 years, and that seems like the high probability event to me. Oil. All right, so USO, this one has been kind of rolling over here recently. We've discussed this. This is one that I usually always cover in the videos. So we're starting to see an acceleration through the downtrend line here of this channel that we were kind of neatly trading in. This trend line of support was kind of the slope at which we were falling ever since breaking this wedge that extends from the February to those June highs. So once we fell out of this wedge, we've kind of been decelerating here at this kind of slope, and now we're accelerating lower. So basically, to me, it's a complete non-touch for the long side. There's no reason I would want to be long this. If anything, you're starting to see momentum pick up on the short side. Now, could this be some type of blow-off or, exhaustion gap? Of course, but I'd have to see more evidence for that to be the case and to make it sort of interesting. If we throw fibs on here, you can see the fibs from the February lows to those May highs, actually. Oh no, they're June highs. So from February to June, if we were to throw fibs on that, we're just coming into the 50% retracement. So honestly, if you think about it from wave structure, trend structure, however you like to analyze markets, we're really not doing anything absurd as far as pulling back. Markets will routinely pull back 50% of their latest leg. So honestly, I don't see anything inherently wrong with this. The bigger issue I have, though, is if you go to the weekly time frame, you can see all of the multi-year downside momentum. If you look on a monthly chart, you can see this could be just the context of a bear flag that could, eventually get us back to retest the lows. So I hate the longer term context, but as far as the daily time frame goes, we're just getting to that 50% retrace. That's fine to me, that's orderly, but there's going to be a lot of overhead supply above us. So for me, long side is a no touch. If you want to play on the short side, I can get behind that thesis. Just continue to trail your stop. IWM 10-day box. Yeah, this is interesting, right? This 120.50 level, again, if my videos have gone through this, right, we know all the inflection areas that have been around this point, right? Back in 2014 March, failed around here. 2014 July failed around here. November 2014 it failed. We did get through it. Then it acted as resistance again. So this has been a level in a kind of point of contention here between bulls and bears for quite some time. Back in December, failed most recently around there. So it's tight. It certainly is, and I think it's going to be one of the tightest ranges we've seen in the IWM over this amount of time in kind of history. So it's certainly going to be of interest here to see which way this resolves. The levels are really clear, so I like that. I like that levels are really clear. It's in the context of the uptrend here. You can see momentum's hanging in there, right? This is doing, much better than, I don't want to say much better than the SPY, but it's certainly, look at the MACD on the SPY versus the MACD on the IWM, a little bit better. And again, we're kind of really looking hard to pull that kind of judgment out, but IWM still holding up well. I think the levels are clear, right? Yeah, so if we can get above yesterday's highs, 120.70, then you could get some type of squeeze there. I'd be interested in that, probably for just a 1 or 2 day pop, maybe. I think that could be pretty interesting, so keep that one on your watch. But yeah, we'll have to see. We'll have to see which way it goes. IBB, obviously, a lot of those names. Biotech, if those small caps continue to help out, or even XBI, IWM would certainly help that and warrant that upside breakout. Now, FEYE, let's look at that. This is one I haven't looked at in some time. So this one's nice and tight, right? Anytime you get nice patterns, nice and tight patterns here, that's something that's always interesting. You could draw this depending on how you want to look at it. The point is you have a nice kind of tight range to work against here. So if we can get above 1720, there's no doubt we would get a squeeze here. I don't know when earnings are, so you're going to want to check that. Weekly time frame, the story has been pretty horrible over the past couple of years. We snapped this downtrend line that was a fierce downtrend that was in place through 2015 down to the beginning of this year, and now we're just basing sideways. Weekly chart, finally the moving averages are catching up, but you can see the MACD is still negative, so there's still some damage done on those longer term time frames. Above 1720 or so, you certainly get a squeeze. This would be something that I would be interested in. But just recognize you're in a very damaged chart on that longer term basis. But I like the pattern here. You could say this is some type of you can label it however you want, right? I just care that the pattern is tight, but you could say that you got some nice inverted head and shoulders right there in FEYE. So nice one. That's a nice chart. I like it. Amazon. So this is good earnings soon, I know that. We did put in, or we're starting to put in, a lower high here, which would concern me if we didn't have earnings in 2 days, because this thing's going to move. I don't know what the implied move is, but I think it's like 10% up or down. So there's going to certainly be a move here in Amazon, so you're going to have to be careful of that. But in the very near term, you have a potential lower high here. This could just be some bigger range that it's morphing into. If you didn't have earnings and then all of a sudden we broke below 730, I think you'd have an issue there. I think you'd have sellers starting to get real aggressive on some type of failed breakout. But longer term, everything's good here. Weekly chart, we're in an uptrend, strong uptrend. Monthly chart, go back as long as you want. Amazon's been trending higher, so we'll have to see how it takes earnings season, right? 10% move is going to be almost $80 in either direction. So that's what the option market's implying. So you could get 650 all the way back down here to this gap, or you could go the other way and we'll be trading at $800 if we get that full 10% move. So that one should be interesting. And if that's it, I think that's the bottom of questions. I'll run through a couple that I've looked at, and I'll run through them really quick. And if you guys have any other questions, just let me know. Square, here's one that we've been talking about for a little bit, is up to this $10 handle today. It's continued to move higher here after putting in this nice base. I like that. Retail's been pretty on fire today. Look at JWN. This is Nordstrom, emerging from a pretty nice little pattern here after a nice run up through July, consolidated, and now it's pushing higher, kind of a day one into that gap. Something that's interesting. Macy's, so this whole retail theme has been kind of on the move today. Macy's kind of similar here, nice actionable breakout. These are names that I'm watching. Finally, or there's a couple more, but we'll end it with Hertz. This had a split or reverse split, so don't think this is a big gap up off earnings. But ever since splitting, this thing has been holding up pretty well and just kind of continues to grind higher. So check the earnings on all these, and all those names that I just went through. But those four are some names that are really working pretty quick. All right, so we got a few more. So yeah, if you guys have any other questions, I got some time. So Google, again, this one's got earnings, and I see Apple here. So both of these have earnings coming up. I think Google is just on a weekly time frame. You can see it. It's just moving sideways in this base right now. And until we get a real convincing move out of that, we had almost one back here in July, just a few weeks ago, where we thought we'd get that breakdown below $700. Buyers stepped in. So, we still have it, and you could get creative and you could draw something more of a flag on this longer term time frame, however you want to, think about it. However, earnings coming up soon. I don't know what the implied move is. We're in the middle of a long-term kind of structural base consolidation here. So I think for me, the next real actionable point would be like above 790. And if we can start making new all-time highs in Google, then that's certainly back in play. If we go to Potash, so POT, this one. This one is trying to firm up here. It's of course been crushed over the past several years. Let's go back on the weekly time frame. You can see it's been nothing but down for potash, and over 2016 it's done a great job at stopping the waterfall and starting to carve out a base. So I do like the potential here for some type of bottoming process and something to emerge here, and I think this is a great looking bottoming candidate. So I think you just really need to wait for the trigger now. Stay patient, understand that we can still move sideways here for a little bit of time. If we can start taking out some of these prior highs here, then I think we're good to go. So for me, you know, I'd look at least above $18, $18.25, and this is a longer term play, right? If I were to be in this, I mean, there's a lot of different ways you can cut it, but this is a significant base that it's been building out after the context of a really drawn out downtrend. So, you know, this could really move. I mean, if you're talking 6-12 months out, you could see potash at $25 if you start to break out from this. Again, that's not a prediction. I'm not saying it has to go there, but the point is, this is a big pattern at work. So just keep that aware. Yeah, I like it, but you got to wait for your kind of entry there. Apple, yeah. So Apple, I mean, we discussed this, I think, in the live broadcast. We did this one a couple of weeks ago, and I think it was on this day here, and we said it could squeeze into earnings up to $100. Well, we did get the squeeze up to $100, but then it continued. Then it just rolled right back over from there. So earnings are out. Well, I think it's tomorrow. That's certainly going to move this stock. I think, again, similar to Google, you got clear lines here. You got clear sort of points at which buyers have stepped in the past. So around $92, this is where we've seen support get demonstrated in Apple many times over. That's an important area to hold. If we start to break below $92, that's where you're getting concerned, especially if you're a long-term kind of shareholder here, or again, I don't want to scare you out. We can, you know, constructively break below that and find support slightly below $90, right? It's possible, but it's in this kind of pattern here. Let's see if it can either get above 103, break this trend line here, get above $100, fill this old gap, which it never really did, and then it starts to get more interesting on the upside. So let's see which way earnings go for this one, and then finally, we'll look at AMBA, AMBA, Ambarella here. Weekly chart, you can see coming back into a pretty significant area. This is where we kind of found some resistance and based out late 2015. So we're coming back to that $60 level. This is, you know, going to be an interesting test for it. We've been floating higher here. I like it. And the question you really have to ask yourself, or just be aware of, is this going to turn into a really kind of big structural sideways range between $35 and $60, you know, something that we just carve out for a long drawn out time, or can we continue this trend higher and start to, you know, head back up over time, back to this, you know, $100 level or plus. This one, again, we're looking at a weekly time frame, so this is something, you know, thinking about 12 months out, 18 months out, but you got to ask yourself that question. Be tough for me to buy right here with knowing all this is right there, so needs to, you know, prove itself. Excuse me. If it can get up to $60, go sideways for 4, 5, 6, 7, 8 weeks, then break out above 60, that's what I'd really like. So I hope that helps there. MSFT, yes. So this one back to highs. I wouldn't fade this one. I'm one that I would always sort of respect when stocks come back up to this range, kind of like AMBA, right? This is something where I would expect overhead supply to kick in around $60. Just, you know, again, my opinion is sort of worthless, but that's my hunch. And Microsoft wouldn't really want to fade this one for a couple of reasons. Mostly is this gap. If it can just completely hold this gap and continue to move, I wouldn't want to fade something like that. When you aggressively get a move back to these highs here, I like the momentum behind that move, and I'm a momentum trader. So for me, I wouldn't be fading it, even though I do respect its resistance. I mean, I wouldn't be doing much with it, right? Honestly, like, I'm not in this. I'm not looking to play this. It's not an A+, but I wouldn't want to fade it. And again, I probably wouldn't want to chase it right now either. So I don't know if that tells you anything. But in other words, if we went sideways here for another 3 or 4 days, 5 days, let this 8 and 20 catch up a little bit, still held the gap, and then had a close above 57, I'd be all over that. Then I'd be interested in a breakout trade. I can't buy it today, but if it did go sideways here between 55 and 57 for the next 4, 5, 6 days, and then it made a close above 57, that'd be something I would very much be interested in. So I'm watching it, but I wouldn't want to fade it. Doesn't mean it can't work, just wouldn't want to fade it myself. All right, so I think that's about everything. So I hope this helped. I'm gonna do these every so often, just quick ones. And again, if you guys haven't signed up for the webinar I'm holding tomorrow at this time, 1 p.m. Eastern, it's gonna be all about strategy. So we're going to be in the boring PowerPoint, but I got some cool examples, entries, exits, strategy, that kind of stuff. And if that's something that interests you, sign up, traderisk.com/webinar. It's free, it's open, and I hope this helped. If you guys have any other questions, feel free to ping me on StockTwits Twitter, and have a great rest of the day. Enjoy the week, and stay out of the heat if you're in that heat storm of the US. The Pacific Northwest is not getting any of it, so I like this. It's been nice and cool recently. So have a great day, everybody, and I will talk to you soon.